Ganz herzlich begrüßen. Einen schönen guten Vormittag hier vom Erste Campus oder am Erste Campus der Erste Group. Wir haben erstmals nach einer langen Dürreperiode auch wieder Journalistinnen und Journalisten im Raum. Herzlich willkommen, danke, dass Sie hier sind. Und wir sind aber auch hybrid heute unterwegs, wie es pandemiebedingt üblich ist und vielleicht auch üblich bleibt. Herzlichen guten Tag und willkommen. Danke fürs Zuschalten auf YouTube, der erstegroup.com Website und auch Twitter. Ich darf kurz einleiten und meine Sprecher begrüßen. Unser CEO Bernd Spalt und unser CFO Stefan Dörfler ist da. Die beiden Herren werden Ihnen in aller Kürze, ich schätze mal so 20 Minuten, die Highlights des Halbjahresergebnisses 2021 präsentieren und nachher stehen die Herren auch für Ihre Fragen zur Verfügung. Hier im Raum bitte per Handzeichen und auf das Mikro warten und die Journalistinnen und Journalisten per Digital-Video, Livecast. Sie haben den Link bekommen, einfach die Fragen eingeben. Ich bekomme sie hier aufs iPad und lese sie vor. Danke, hiermit genug der Einleitung und Stefan Dörfler, the floor is yours.
Ja, vielen Dank, Peter. Schönen Vormittag, sehr geehrte Damen und Herren. Es freut mich ganz besonders, dass wir heute in einer guten Mischung, und ich bin überzeugt, du hast recht, es wird das die Zukunft in einer guten Mischung aus persönlicher Präsenz und Teilnahme eben im digitalen Format diese Pressekonferenz abhalten dürfen. Und ich freue mich auch, dass wir ein sehr gutes und nach dieser doch sehr, sehr schweren und letztlich für uns alle belastenden Krise im Jahr 2020 sehr, sehr positives erstes Halbjahr der Erste Group präsentieren dürfen. Ich möchte gleich in medias res gehen und Ihnen die wesentlichen Parameter des Ergebnisses von Jänner bis Juni 2021 darlegen. Wir haben die Betriebserträge, insbesondere auch im Vergleich zum Jahr 2020, deutlich steigern können. Sie sehen dies hier in absoluten Zahlen sowohl im Bereich des Zinsertrags als auch im Bereich des Fee-Einkommens und letztlich auch im Trading- und Fair-Value-Ergebnis. Aber ich möchte darauf hinweisen, dass die größte Dynamik, und das ist sehr erfreulich,
a dynamic development, because this has been our overarching goal. The dynamic developments can be seen in fee and provision income. Now, why is this so important? Now, what's the interest rate environment that we are moving about? And this will stay the same for the next months to come. Now, we need to diversify our income areas or categories. This is easier said than done. Now, the business colleagues, of course, are supported by the entire bank in all countries, and they have managed to bring about a great deal of dynamic movements. This goes for asset management, this goes for securities business, and I think our customers are able to benefit from this. So there are very dynamic developments going on, and this can be seen in the very good result as far as the fee income is concerned. Now, of course, the trading result has improved over the first two quarters 2020. I'm sure that you remember that after the first shock wave caused by the pandemic, turbulences occurred in the capital market, and they, of course, had an impact on the first two quarters, and that's why we need to put things into perspective here as far as this difference is concerned. So 2021 has been a regular result, 2020 a less than regular result. Now, operating expenses, well, we've promised a number of things and we've set some goals. Bernd Spalt and the other board members, well, that's something that we actually announced pre-corona. What we announced is this. We want to grow in our region, we want to enhance efficiency in terms of putting our business into practice, and digitization. Those are the three pillars, that's the magic triangle, if you like. And we have been very, very consistent, very sober in implementing this can also be seen in regards to costs that have remained stable year on year. And that's why the operating result is 1.688 billion euro in the first 2 quarters of 2021, as you can see here on the slide. Well, together with our colleagues, I've assembled these figures. Risk costs. Well, 2019 is also displayed here quite intentionally in order to show to you that the first 2 quarters 2021 look great, especially compared to 2020. The net result is quite impressive, as you can see. Well, looking ahead, we do hope that 2020 was an outlier as opposed to 2021. We don't want 2021 to be an outlier. So I've looked at the first 2 quarters 21, there were positive risk cost net releases, in other words. So what we want to demonstrate is that risk costs in the first 2 quarters 2021 act as an indicator of sorts. We do hope that we will see economic normalcy again. But there is still a great deal of uncertainty among economists. Bernd Spalt, when he takes the floor, will delve into this and will talk about the future and our future outlook. There are some areas where we are quite upbeat about the future and other areas where we are a bit more concerned. But overall, the risk environment in the first 2 quarters is quite positive. And this, of course, has had a number of repercussions. That's the net result year on year, the first 2 quarters. So what we see here is that this has led to a substantial increase of our net result. Just look at the 2 major blocks. It's operating income that I talked about before, 300 million better than in the first 2 quarters 2020. But then, of course, 600 million, that's the improvement as far as risk costs go. And we have here a total of 83 million as opposed to 675 in the first 2 quarters 2020. The other categories are negligible compared to those 2 blocks. But what's important for Austrians is non-controlling interests. That's deductions for non-controlling interests. I'm talking about the savings banks, the Sparkassen, the independent savings banks in Austria that are only partly owned by Erste Bank. Well, their result in the first 2 quarters has been quite good, and that's why we have a deduction here. And that deduction actually increased. That has had an impact on our net stock price. Well, I've interacted with you quite often, and I've often alluded to the following fact. Now, during the crisis, of course, we experienced a number of problems, and that's why it's important for us to have a very solid CET basis. We need this solid capital position in order to manage things well and to also support growth in our region, especially as far as organic business is concerned, lending in order to support our customers in the region. But also, of course, as far as M&A opportunities are concerned. So we want to also grow inorganically, and that's why we need a strong capital position. That is a major requirement if you want to go for this or opt for this. And that's why I'm very happy to see that we've seen a combination of great result figures, good and solid capital management, as well as a balanced dividend distribution policy. So as of June 2021, we have a CET of 14.2, Basel III fully loaded for the specialists among you. This concerns all the regulatory elements, and we're very happy to have this as a basis. And I think that we can be quite upbeat about the future, even though there are risks out there, risks that may emerge, and that are also due to the pandemic. Now, as far as the outlook is concerned, and as far as the main indicators of our region are concerned, I'd like to hand over to Bernd Spalt.
Vielen Dank, Steff.
Thank you, Stefan. Good morning, ladies and gentlemen. It's great to see you also here face-to-face in the room. I mean, online meetings are okay too, but face-to-face is always better. I'm very pleased to have you here. Now, let me describe the big picture, and then I would like to refer to what Stefan has said. Already in January and February, we said that we believe that 2021 will be a year of economic recovery and economic upswing. Because, and that is our hope, the health crisis will become manageable. And a lot of the things we had hoped for have actually materialized. I wasn't always very positive when it came to testing and tracing, and by the public authorities, a lot of things were not ideally managed, but as far as the vaccination is concerned, we were justified in having reservations and concerns, but the question whether we would be able to get enough vaccines and whether we'd be able to manage it, well, all of these concerns were baseless. All of the public strategies and also the strategies deployed in the companies have really worked, and that's a big compliment both to the companies as well as to the public authorities. They have organized this really well, and this is critical and really essential for us to return to normality. And we're not done yet. It's early days yet. We can't celebrate it, but important progress has been achieved, and this isn't just the summer season, which had lower infection rates like last year, but the vaccination rate brings us more stability. And this vaccination rate, of course, will have to improve further. I think we have achieved a lot together as a society, both in the public and private sector, which constitutes progress, and that gives us cause for optimism. This is really important, and this has always been our hypothesis, because the health situation needs to stabilize, and then we're going to see an easing of restrictions, and the lockdowns will no longer be necessary. There will be a catch-up effect. There's not only this longing for personal face-to-face meetings that we are all feeling, but there's also the longing to be able to travel, to spend money, to consume, to go out on the street, and to invest and to make use of growth opportunities that are opening up. And this has characterized the first half of the year. Just look at life in the streets. This is something that we have been longing for a long time. And all the forecasts in terms of how strongly the economy is going to be growing after this event of a century, really. Well, we corrected all of these estimates upward. All the original assumptions in terms of economic growth were revised upward. And that has something to do with the quality of our region. A lot of our countries are very strong when it comes to production, manufacturing, industry. And this sector has hardly suffered during the crisis. And the other sectors were either supported by public funding programs or financing from banks, or through their own equity managed to go through these difficult times, and the upswing can make itself felt very strongly for everybody, actually. We have strong labor market figures from all countries, and we're very optimistic after this long, dire period. And at this point, I would like to refer to Europe. You'll know that Europe is very dear to me. And in this context, in spite of all the complaints about things that didn't go that well, that could have gone better, but anyway, we did two great things, and nobody apart from Europe can do that. One thing is the EU Next Generation Fund, this 750 billion fund, where the European authorities said that this money will be made available in forms of grants and loans to permanently or sustainably achieve protection of the climate, a digital transformation, and structural reforms, which are often neglected. Because everybody's talking about green, about being sustainable, digital, but hardly anybody talks about structural reforms. And structural reforms are incredibly important. Reforms of the pension system are extremely important, and also the labor market needs to be reformed, the digitization of the labor market and the opening of the labor market. These things are incredibly important. Now, something has happened which is not only the EU providing money, which will be poured into some budget holes that opened up during the crisis in order to help overcome the crisis, and then we'll maybe paint it over green. No, this is not what happened. So what did happen, and this is how I would like to comment it, is we've seen a sign of optimism, which is extremely important in this profound crisis because it's about our belief in the future. That's one thing. And the second thing is a strong sign of solidarity. You can only emerge from a crisis through solidarity. This is something we should not underestimate. So, from the point of view of the European Union, this Next Generation Fund was set up. And what does this mean in terms of economic growth for our regions and the increase of prosperity? I'll come back to that. And then we have to talk about vaccines. Now, many people complained that there were some hiccups in the beginning when it came to procuring vaccines, but of course it is a great sign of strength to say that we are not going to allow for any competition where there will be a bull run of the strongest countries who will get all the vaccines and everybody else is marginalized. No, this is a European program that everybody benefited from. And that's another big sign of solidarity. And after some initial problems, of course, we don't have to downplay the importance of these, but now we can say that we have more than enough vaccines. We're now in a phase where we can say the first run is over, the first round of vaccination is over, and now maybe we should agree that we should use what we have in an effective way. And we should actually consume what we have. Our upswing, our sustainability, our success will depend on whether we can achieve a higher rate of immunization coverage. And I'm quite confident that if we all work together and see this also as a sign of solidarity, that it can be done. And all things considered, this means that it is not only the growth rates that you are seeing here that can be achieved, but thanks to the additional grants and loans and financing, and all of that will be, of course, in training some co-financing, and this will lead to a turbocharger effect. And that, in turn, constitutes another opportunity, because many people are always saying about the risks and threats and the things that can happen, but these are opportunities that lie ahead of us, and we should not forget about those. And I think we are all more than entitled to look to the future with optimism, if we are firmly committed. Now, all things told, I think the prospects are very good. If you consider 2021 as a year of an upswing and a year of change, what we are seeing for us and for all regions, independent of the individual countries, we are seeing very robust growth rates in the loan business, and that is driven by two elements. On the retail side, there's an incredible need for housing, and these mortgage loans are really taking off. And I'm not so much seeing the risk of interest rate hikes might make the loans unaffordable. I think that the rising prices of real estate might be a problem for young families to afford housing. We'll have to find solutions for that, because it has to be the case that young families should be able to afford an apartment or an own home. That is increasingly becoming a problem at a time where we have a low interest rate environment and where certain asset prices are moving up. But basically, there will continue to be a strong demand, and companies are going to be investing, because the climate transformation and the digital transformation creates investment opportunities that can create robust jobs. The risk costs are still quite moderate. And what we did last year, as Stefan said, we booked extremely high risk costs. We made provisions because we didn't want to postpone the problem. So looking forward, if there might be major insolvencies, we did some front loading, but this didn't happen because the public funding programs worked, and we're seeing a very favorable, actually historically low rate of insolvencies, and we still see a strong situation in the labor market. On the side of the share dividends, you need that the ECB, and its unfathomable wisdom, recommended not to pay out high dividends. So as long as the uncertainties prevailed in the markets, this recommendation or this restriction has now been eliminated. We already distributed 50 cents per share this year. This was still within the amount allowed by these restrictions. And in the fourth quarter, we're going to have an extraordinary annual shareholders meeting, where in addition to the 50 cent that has already been distributed, another €1 per share will be paid out for this business year. And if our shareholders approve this, and this will be happening this year. And 80 cents per share have already been provisioned for the dividend to be paid next year. So next year we also want to pay a higher dividend. So you can expect us to go for €1.60 next year by way of a dividend payment. So we are returning to more normal situations. It will not be the status quo that we had before the pandemic. I think nobody can wish for things to not have changed compared to before the pandemic. We are all surprised by how quickly we can react to this crisis. We are going to have learned a lot after the crisis, and this crisis, well, will have shown us that we have now finally understood, after 45 years, that the climate change is happening and that we need to do something about it. And this also constitutes a big opportunity. And now's the time to do something. It's not going away. Right. By way of summary, this year, the way it looks, we're going to have a much higher net profit than last year. We're very grateful for that. We still believe that it's early days. We can't celebrate yet. We still believe that there's still a lot of uncertainty out there. So we might still see some things happening in terms of the development of the health situation. So we should make sure that all of us, we should do everything that's in our hand for that to not happen. But on the whole, the situation is positive. And as a bank, we are a mirror image of the economy. The economy is recovering. There are great needs to venture into uncharted territory, and we will gladly be part of this journey. Thank you for your attention, and Stefan and myself are looking forward to your questions.
Right. I'm also looking forward to your questions. Please raise your hand if you're here in person, or else type in your question, and I'll be able to read those questions from my iPad. The floor is yours. Mr. Kowalczyk, please. Hello. On the loan growth of corporates, are there some sectors that experience problems, and has growth picked up in other areas? Second question, the statute program in the first 2 quarters, what effects have you seen?
Let me start with loan growth and the situation in the industry. Well, in the various industries and sectors, we have a quite mixed bag. If you take a look at the services sector, or tourism in particular, there have been some bridging financing mechanisms and state support measures, so tourism has managed to weather the storm quite well. And what I expect is that in future, since this is a segment which doesn't have a lot of equity, and there will be a greater need for equity, and that we should finally come up with a regulatory framework, and we've been discussing this with politicians for a long time, to ensure that these tourism companies do not get any loans, they need equity. A loan doesn't solve a problem if they are out of equity. So for a long time we've been talking about it, we're trying to make proposals, create the boundary conditions, and show ways and means how equity can be made available to tourist industries. Right now that we have so much money which is not bearing interest, just sitting in the accounts. And we believe that we will need some more funding of operating expenses, but we also need a lot more equity. Now, in the manufacturing industry, the situation is quite different. The manufacturing industry has managed to steer through the crisis without or hardly any damage. I think some business models actually were more favorable during the crisis. They can invest, they want to invest, and this is where the needs are going to be different. They will need more project finance, and we are going to finance investments for them.
Let me add something here. Now, the economic effects of DLTO, and that's why you asked this question here during this press briefing. Well, these effects can now be booked in Q2. As far as this program is concerned, loan growth needs to be approved. And based on this, and that's the underlying idea of the ECB, of course, based on this, favorable interest rates can be garnered. The catch-up booking comprised 90 million, and this applied to different banks in Austria, the savings banks, the holding, and Erste Bank Austria, as well as our Slovak subsidiary, which also acts in the euro space. Now, having said this, you need to add something. Restrictions are there. Just look at the banking landscape in Europe. There are severe restrictions out there. And some of the banks actually could not achieve this growth in loans, and that's why we're very happy to have proved this growth together with our customers. And this ties into what Bernd Spalt just alluded to. In real terms, lending has continued during the crisis and now during the upswing in Q2, and we've been able to put things into practice properly, and we've been very happy to implement all of our goals, and this of course has had a positive impact on our P&L. Thank you. I have a question that comes from Hungary, and I'm going to read it out in English.
This works with my translators in the back office. So Mr. Gergely Brückner von telex.hu asks, following central banks such as the Hungarian one are increasingly talking about the need to create central bank digital money. Do you see this as a threat to commercial banks? So, ist das Digitalgeld eine Bedrohung?
So is digital money a threat for commercial banks?
Threat at all. And I think if you look at what Mrs. Lagarde has been sketching and outlining how digital currencies could look like, there is a limit of 3,000 euro at that stage for a digital euro, which is complementary to the usual currency and which should make life a little easier. I do think that this will not crowd out our currencies. I don't think that this will replace the analog or the currencies which are yet available. This is a test, but I think the jury is still out very much on what kind of problems should be solved. Everybody's speaking about digital currencies, and it's a beautiful solution where the problem itself has not been properly described. So yes, it will be offered. Let's see what it can do, and no, it's not a threat.
Okay, thank you, danke. Weitere Fragen?
Okay, are there further questions? Yes, go ahead. And then Ms. Kishko. A question that relates to the extraordinary AGM. Now, this additional dividend, will this be the only item on the agenda, or is something else in the works? Well, as far as this extraordinary dividend is concerned, let me just remind you of the following. It's important to note that this amount of up to €1, well, we've already made reserves in the past, and we've always said that if the ECB were to do what it did, if it were to lift the ban, then we would, of course, immediately follow things through. I don't know if there will be another item on the agenda. I don't know of any such additional items. Maybe you do.
Well, let me put it this way. That is definitely going to be on the agenda of the extraordinary general meeting. at the end of, well, this is the end of July, and it will probably be at the end of November that we're going to hold this extraordinary meeting, and maybe we'll come up with other points that will be put on that agenda. We have 4 weeks' time to put other things on the agenda, but there are no items right now that will be put on the agenda right now.
All right, Ms. Kiszko. And then a question to be put by NZZ, tying in with what was said by Kamil. Let me just ask you about equity financing for the tourism sector. Will there be tax incentives? Would we require tax incentives? How would this work?
Thank you for this question. I think this is a very broad-based picture that we are talking about here. It will be diverse. We will need several aspects. But what we are starting from is that there are companies that need equity, Austrian SMEs, especially in the area of tourism, that don't have a lot of equity and that can certainly not strengthen their equity in times of falling revenue. So this demand situation has become more pronounced during the crisis. On the supply side, we have a savings rate of almost 14% here in Austria, which is unparalleled and unprecedented. So there's a lot of money out there. So money is here, money is needed elsewhere, money that should be invested and should not have to suffer negative interest rates. And this money is needed, on the other hand, in order to be able to grow and achieve growth. So the first prerequisite is how can we proceed on the regulatory and legal framework to create a framework for this money can be invested by small investors in a pool of Austrian SMEs. There are some bills, some legal proposals on the table. So this is about creating structures where you don't need a limited company, where you hope that you're going to get your money out at some point in the future, but where you can invest as a normal investor in such securities because you're interested or you believe in the growth of the tourist industry. So you create a set of rules, and you don't need the European Union for that. We can do this in Austria. We don't need to wait for anybody to do this. That's the first major step. The second element you talked about, I believe that on the investor side as well as on the side of companies that need equity, we need to create a tax incentive. I think it's been repeatedly communicated, even though it's not in the Federal Gazette yet, that fictitious equity interest should be considered the same as the interest paid on borrowed capital, so that there's an incentive to take up equity. But also on the investor side, of course, we should not have speculatory taxes that are prohibitive. Or let's say you can invest in a venture and then maybe take your money out without having to pay 25% to the fiscal authorities. So you need a bouquet of different rules in order to stimulate this industry. So it's like a capital market outside of the stock exchange, but nothing speaks against it. Nobody will suffer as a consequence. If we are to do that, then we will maybe do the same as countries such as Luxembourg. I don't want our Austrian SMEs to only be provided with equity if they get it from Luxembourg. Maybe we can do the same here in Austria. So we need tax incentives and well, this set of rules is already on the table, the proposals are there, but it needs to be implemented. But things are moving, and, well, we're going to talk about this some more. Yes, it's a SICAV structure for Austria, and it is not hard to do. It's been practiced 100 times before, so we don't need to reinvent the wheel. This is something that is feasible, and I'm not going to create some naive hopes. Once we've established this, and we could have done it 12 months ago. So once we have established that, it's not going to happen overnight, of course. It'll take a long time to create trust, to make sure that this is a manageable risk, it's feasible, and also for the companies taking up this equity capital. Austrian companies, of course, are family-owned and operated companies, and they are not interested in having such a process of participation which leads to the sale of the company. They want this equity capital in order to be able to emerge from this crisis through growth and self-financing. They don't want everybody who has a say with every decision, and they don't want to have to sell their assets at the end. So all of that is manageable, that can be done, that needs time, explanation, and we need to build up trust. But first of all, we need a set of rules, otherwise it's not going to work.
Okay. Zuerst der Herr.
Daniel Winkelried from NZZ and then Ms. Grünwald. Mr. Winkelried's question. He talks about the real estate market. Austria is the most expensive country as far as real estate is concerned. That's what news articles have said. The price tag for new housing is higher in Austria than anywhere else. Those are surprising figures. Does this also tally with your observations? Is this statistic a bit distorted? Well, I don't really know the details that the journalist is referring to, but as far as I know about the property market or the real estate market, I think that this refers to increases. Now, as far as increases go, the Austrian real estate market, for reasons that have already been enumerated, has picked up quite dramatically. But if you look into absolute figures, if you compare Austrian cities to other cities, I would say that Vienna is still not more expensive than Paris, Munich, or Berlin. Well, I would have to look into the exact figures that the journalist alludes to. But what has come out quite clearly over the past few years, ever since interest rates have been so low, is this, and now especially over the past 1.5 years, during the pandemic in other words, well, there is a tendency, of course, towards asset inflation in the real estate sector, and this train has accelerated, if you like. There are some regions like the Prague metropolitan area or the Budapest metropolitan area, as well as Austria, large areas of Austria, well, they're considered quite attractive and appealing. There's a great deal of interest in properties, there is an upswing, but what's the downside? Now, using the real estate is something that people want to benefit from. I'm not saying that they're all speculators, but of course, this also has to do with investment opportunities. Of course, discussions are taking place in Austria and elsewhere about how to use property, vacation homes, or in an urban environment, because there are a lot of empty homes out there, a low degree of utilization, and that's not something that society is happy with in the long run. As was already said by Bernd Spalt, there are others who are hardly able to buy themselves homes. Housing has become less than affordable. Well, of course, the dynamic developments that we're seeing are not all that negative. Yes, a great deal of positive developments have occurred. I'm talking about the CEs, for example, where people who couldn't purchase home in the past now are able to do so because their income levels have increased. So they now have access to condos, to single-family homes. So this is a complex discussion that's going on. Unfortunately, as I said before, I can't really answer this question because I'm not familiar with the statistics that the journalist alluded to. Thank you.
Ich hoffe dennoch für den Herrn.
I still hope for the gentleman Winkelried that he managed to glean something from your answer. Ms. Grünwald has an answer. I have two questions, actually. The first question is about the real estate topic. Is this already a speculative bubble in the real estate industry here in Austria? And the second question is the German magazine Der Spiegel said that who's afraid of inflation in its edition of June. How do you see the development, and should we be afraid of inflation? I think we're going to share answering this. Let me start by answering the first question. I will comment both, but I would like to ask Stefan to comment as well. Let me talk about this real estate bubble here in Austria that you referred to. Yes, we are seeing a strong rise in prices, but there are two things that protect us from a real estate bubble here in Austria. The first thing is that as opposed to Eastern Europe, here in Austria we have a lot of subsidized housing construction, also subsidized structures of cooperative housing, which takes out a lot of the inflation and crazy prices. So this stabilizes the overall real estate portfolio, and this is something that is very specific to Austria and that is highly appreciated here. Over the past 50 years, this has helped Austria because it's been a real stabilizing effect, and that really helps us in that respect. So the first point is we have subsidized housing construction and affordable housing, so we have a benefit in terms of that. The second thing is that, yes, there is a trend towards people buying apartments for investment purposes. But still, the majority of mortgage loans are granted for people who buy their own homes. It's not like in America where you buy a house or apartment and then sell it 1 year later and try to benefit from this rise in real estate prices. So this speculative element, as opposed to Anglo-Saxon countries, is not so widespread here. People are buying houses or apartments because that's where they want to live. But of course, in this low-interest environment, there's a lot of incentives and a lot of money going around, so that a lot of money is invested in this golden concrete, as we call it, and we are seeing some overheating, but I don't see a bubble in the real estate industry. The other aspect that I would like to briefly refer to before handing over to Stefan is inflation. We heard strong statements coming from the European Central Bank and also from the American Fed, who said that there's a temporary inflation which will go away. We're talking about basic effects. Well, this is not always so intuitive and so easy to understand, because there's a lot of elements that point towards increasing prices for raw materials, for construction materials, maybe supply chains that are no longer completely intact. And that's another important subject for the future, the shortage of skilled workers. There's a lot of fundamentals which seem to indicate that prices might be rising. The central banks are still assuring us that this is only temporary, but I think we should keep a close eye on this. So we cannot really count on that not being a topic anymore next year. Yes.
I quite agree with this. Just look at the developments that have unfolded over the past 48 hours. Just look at the comments that have been made. Now, the ECB has come out with statements saying that this temporary, talked about 2.8 and not higher rates. And then just look at the headlines coming out of various countries. Just look at the German figures. So what we're seeing is that this is a priority issue. And I quite agree with Bernd's take on the big picture. Let me also add an additional element here. And let's talk about the vantage point of Erste Group. And this has to do with the way we do business. Now, we are a perfect hybrid. We are active in the Eurozone and outside. We've got countries like the Czech Republic, Hungary, and Romania. Well, they will continue having their own currencies, and then we've got Slovakia, Austria, and then Croatia that will get the euro in 2023, probably. And then, of course, what about inflation rates? In the euro area, the ECB is very likely not to change its interest policy. What about the difference between those countries and other countries that will respond to interest rates? The Czech central bank, the Hungarian one, well, they have already increased interest rates. Look at the Romanian central bank. Well, by the end of this year or by early next year, discussions will take place. So it's a corrective mechanism, if you like. You need to respond to inflation by adapting interest rates. So this will continue to stay with us, and for us, this will continue to be a big issue when it comes to inflation, interest rate performances, as well as growth and related aspects, such as business developments. So this will be an intriguing issue in the future as well. By early next year, we'll be able to say if the Fed and ECB statements have come out or have come true, or if inflationary tendencies, of course, are more sustainable in the long run. We'll see. The jury's still out.
Weitere Fragen?
Are there any further questions in the room? I have not received any questions from those watching online. I see no questions here in the room, so thank you very much. I'd like to thank Bernd Spalt, our CEO, Stefan Dörfler, CFO. Thank you for answering your questions. Thank you for coming. Thank you for watching online. And I would like to wish you a successful day and a great weekend. I hope it will stay sunny. All the best here from the Erste campus of the Erste Bank. Thank you.